when you're making a decision to invest, in what capacity are you available?
Bombay has been struggling because their best startups have left and gone to Bangalore.
Or what are some issues that you see first-time founders face?
They never have 100% knowledge of the problem or the market.
You have to figure out, okay, how is this going to work for an Indian customer who has very different notions?
That's where the failures and disappointments happen. The sexy product, no one is buying.
It's a little harder to get angel checks in India and build a bigger round.
The challenge that is coming now is with the generative AI.
What do you think is missing from the Indian startup ecosystem? Hey guys, welcome back to Funds and Founders. Today we have on Rajesh. Rajesh is an alumni from DC, has invested in over 125 companies. You're a member of a lot of boards, an advisor to a lot of startups, and you're the founder and current CEO of GSF since as of 2012.
That's right.
Welcome to the show.
Thank you. Thank you.
I think we first met when you did GSF Super Angels ka batch, and I joined that. It was sort of my, how do I invest in India? How do I understand angel investing? So I wanted to kick it off from there and just understand what should a founder think about when starting to raise a round and reaching out to angels. What tips do you have for someone who's first-time founder trying to figure this out, and then we'll go deeper into that?
The first-time founders is the key word here. Actually, we get now a lot of founders who are second-time founder, third-time founders. So they are a little more seasoned. First-time founders are generally clueless.
Yeah.
So basically, I look at 2-3 things when I meet founders. And has he moved from idea to product or from product to customers?
Traction.
A little bit of traction. And finally, it's very rare to find startups within 6 months or 1 year of innovation to be hitting PMF.
Yeah.
So that is one stage I determine where they are.
Nice.
And a lot of time within the first 1 year, you're pivoting, changing, adapting yourself to really, they have an idea of a problem, but they don't know how to solve it, or they don't really know what the deep problem is. There's a very experimental phase in that time when they're raising their first money. Sometimes it's friends and family money.
Yeah.
Sometimes it's angel money. But generally, in Indian context, it's 100K to 500K kind of money they raise.
Yeah.
So determining that stage is first step I do, and I think they should be aware of where they are in their own journey.
Yeah.
And the second is if they have traction, it's a little bit more easier because there is some customer validation to make investment decision. But if it is not, then it's very, very in the realm of imagination. So then you're trying to see how big his TAM could be, how big this thing could become on one hand. And secondly, you're trying to assess, can he execute on what he's promising? And it may be that either you don't relate with the problem he's solving, or you don't believe problem is big enough, or many times you don't think he's the right guy to solve the problem.
Yeah.
So this is what is going on in my head when I do the first few meetings.
Yeah.
Is to understand his environment, his energy, his ability to identify a problem and solve it. How does he take first steps? What's his decision-making process? Who are his first few hires? How did he hire them? Does he have a network of talent? So these are some of the things you're trying to place in the context of making an investment decision.
Makes sense. So you mentioned one thing called PMF, right? So product market fit. If I've done 57 episodes so far, it's probably come up 20, 25 different times. What's your definition of product market fit? How do you define PMF?
Look, I have never invested in any startup which had PMF, to be honest. So I take a bet on startups when they're pretty much very early, right? But then there have been startups who have hit PMF later on. I think it's a stage where a significant number of customer addition is happening organically.
Yeah.
Right. It's a stage where economics has started to make sense. Right. So in the sense, let me contextualize. If it's a B2C company, a lot of organic growth is happening, and it is becoming visible to us that at certain scale, they'll become profitable. Right. If it just has B2B kind of a company, then customer adoption is up, right? And there is a pickup on that adoption, even though there is a sales effort. So these are some of the early indicators of PMF. PMF is a very, very tricky construct, and many companies hit early traction, but then they figure this is not PMF, right? They need to then pivot and redefine the problem.
Yeah.
So it's an iterative process, I would say.
Yeah.
But at early stage, you're trying to find the direction where you're steering your company. So I usually invest at that stage, but I don't have the luxury of big funding that I go into the company, which is already achieved PMF.
Exactly.
So, but it's a quest.
Yeah.
Right. You're always trying to see what would be PMF of this startup if I were to invest. Right.
Excellent. So, when you're making a decision to invest, in what capacity are you available? So, you've done over 125 investments, right? So, a lot of people who are raising friends and family and angel are also looking for a little bit of guidance or a little bit of mentorship from this investor pool that they're investing from.
Yeah.
So, how do you support? How do you recommend angels can support? Just talk about that a little bit.
Yeah. So, I think some people have labeled me founder of founders. And it's because we call ourselves GSF as founders for founders.
Yeah.
So we are all founders, another 7-8 of us who put money behind it. And our expertise is available of building, scaling the companies. Founders need it.
Makes sense.
But I am not a heavy touch investor. I'm a light touch investor. My premise of investing is that first, hopefully, I'm investing in a founder who will never need anything from me. He's so self-motivated. He knows more than me. Actually, I'll be learning from him.
Yeah.
And the only role I have is of a friend who will have a coffee with him and discuss some personal life issues or maybe some strategic issues where you're thinking through long term. Right? That's my ideal construct. But I do find myself becoming useful to many, many companies I've invested in 3-4 contexts. One is when they're raising next round.
Yeah.
Right? You need help to build that round, think through that round, and then do introductions, right? But the strategic construct of that round, how much to raise, at what valuation, from who, how do you make the pitch? So that's where I end up getting involved with most of them. They come to me.
Yeah.
The second is during this phase when they are building teams, there are some missing pieces. And they're always seeking some help. Sometimes CTO, sometimes a co-founder, sometimes a business development person, sometimes US GTM is missing. So the missing piece, because we never invest in a company which is complete at the stage we come. There's a lot of missing pieces.
Yeah.
So we make the founder aware of what is missing, and if he needs our help in fulfilling that, then I sort of step in.
Makes sense.
This is the second. Third is unusual situations. Founders fight, founders split. A lot of shit happens in the company. One founder died. Then there's complications. So at that point of time, founders need someone who can step in, counsel them, away from the role of life coach.
Yeah.
Sometimes hard decisions have to be taken. These are 3-4. Within that, in the funding side, a lot of time companies come up with acquisition offers. But either they are acquiring companies or they are being made offers. Then founders come to me to seek my advice. So these are the roles I play. But generally, I see myself as a friend who's available on call. You can call me any time of day and night. I am not seeking daily reports, monthly reports, weekly reports. My expectation is keep me informed as you would inform your board. Right? On a every quarterly basis. Give us an update if something significant happened. We don't interfere in the work of the company. I actually don't even take board seats in the young startups. But I'm available if you need me.
Yeah.
And happy to have as much time you want me to spend with you. I'm available.
Thanks, Alex.
Right? There's no bill for it.
So you've invested in a very amount of startups, like first-time founders, second, third, seasoned founders. If we talk about first-time founders, what is a commonality that you see amongst them? What are some issues that you see first-time founders face more often than second, third, seasoned founders? Like, are there particular parts of building a company that they seem to be not as seasoned in or not as knowledgeable of?
I think irrespective of first, second, third time, even the second and third time founders actually make the same mistake that first time founders do, right? Because PMF is very hard to achieve, right? So, in fact, investing in second, third time founders is even more riskier because they raise larger amount of money on unknown problems. Yeah. And it could be very risky. Yeah. Right. The thing is, see, the founders are generally a group of people who are self-motivated, right? They're problem solvers, right? Most of the things they figure out. It's not that they need is rocket science. Yeah. I think there are points in their journey where they need to tap some shoulders and
get some guidance.
Talk to someone to affirm their beliefs, right? Sometimes they have to do some tough firing decisions. Yeah. For example, someone is not performing, and you have to be very ruthless when you're early stage, right? Because you're a small team, you hire people that are not working out, you have to let them go, right? These are tough decisions. Maybe they want someone to talk to someone before they take it up. Or sometimes, as I shared, there are many situations. So first time founders learn very, very fast, actually, incredibly fast. Most of the problems they solve themselves, right? But we have a group of 250 founders which has become very valuable to first time founders because then they can share ideas there. So which software to use for this? I'm going to US, what regulatory issue is there? Someone can he recommend some lawyer for this work? So those resources are available from this community on tap. Most of these founders have gone through this journey.
Yeah.
So that I have found that GSF WhatsApp group incredibly useful to people, and every day there is something going on there. So even I don't have to step in for those kind of.
Because there's other people ready.
Other people guiding. Yeah. Other than that, I think there could be stressful situations where they need help, right? Counseling, and they are human beings going through a lot of stress in the beginning. It's good to have a circle of friends who can let them sort of come back to normal.
Yeah, makes sense. Right. Also, I feel like having a group of friends that you relate with, key. We're all in a similar journey. We all understand what we're doing.
Mostly when they come to me, I tell them, okay, talk to this guy. Right? I think he has faced similar issues. And that they find very helpful. Yeah. Right? If there is some ONDC problem, we have this founder, he discussed this issue with me. Why don't you talk to him? How we solved it. So founders give best help to other founders. Yeah. That's my beliefs.
Would you say so? I'm primarily based in Austin, and I have networked a lot with Austin founders, SF founders, New York founders. I feel like every city has a vibe, right? Austin is more collaborative, more focused on a well-balanced life. SF is more about be on the grind, like just, hack away, try to get it up and running. And New York is a little more combative from what I've seen. People are not as openly helpful. You gotta really break a wall to get through that. What would you dub India or maybe Delhi, whichever one you're more comfortable? What is the founder ecosystem like here? Is it more collaborative? Is it more like competitive? Because Indians are known to be sort of like, I'm gonna put myself above everything else, right? So
no, it's not like that. India, I have in fact, my biggest portfolio is in Bangalore. Not even though I live in Delhi, our biggest hits have also come from Bangalore, and then NCR because we sit here with them, and also is the second largest. Bangalore and NCR actually are 70-80% of the startups in India. Then I think Bombay, Chennai, and Hyderabad are very important. Next 3 years in that sense. Chennai, Hyderabad, Bangalore is very important for us as an organization. Almost 80% of what we do is done in these three cities. Right?
Is that just because of sheer density, or is there a difference in the quality of startups also coming out of?
Nature of startups. So I think the D2C startups are still more North and Bombay centric. Right. But if you are more tech oriented, which we are, and if you're, for example, nowadays, if you're deep tech oriented, then South has more intensity. Chennai, Bangalore, and Hyderabad. Nice. A larger intensity of deep tech startups there. So that's the difference. Bombay has been struggling because their best startups have left and gone to Bangalore. Yeah. Ola went, and now recently Zepto even change their space.
Okay.
So
They're all based in Bangalore.
now they shifted because the talent issue, right? And Bombay is very expensive. So it's like Bangalore pull is there in India, right? I think as far as Indian startups founders are concerned, they are generally collaborative, right? And you have bad apples everywhere, on odd things, and it's come out in press also, few things. But I still feel most founders are trying to create a good work culture. They're trying to give good incentives to the employees. They're fair to their co-founders. Yeah. I think that's what you want, right? And generally helpful to the community. I have, at least in my portfolio, I've not found, there are a few people who don't live up to your ideals. Yeah. Well, it's all right. I mean, it's not a significant concern. Yeah. In fact, I'm in the business where I have a lot of failures, let me tell you. Yeah. Right. And I've written about it. Yeah. But I do early stage investing. And I have funded out of the failures, the startups again, the founders. And they always pitch to me. Not just the founder who succeeded, you fund them again, but also funded people whose first, I lost money, right? And that's because I think generally the good people, they made a good go at it. For certain reason, it didn't work out. If I have a good feel about the second time when they're starting, so I'll go ahead and invest. So I don't hold back. Also, I think at that point, you understand the founder's approach, right? So I don't know if this is the right analogy, but like they made fundamentally the right decisions. There's a lot of factors of market factors, tech factors that sometimes cause ideas not to. The founders are by nature optimists. Yeah. So they are imagining a market. The biggest mistake is that they imagine a market and then they create a product and then they hope that product is the right solution. That market is there for that product. And that's an iterative process. Yeah. Right. And that's where the failures and disappointments happen. You create a sexy product, no one is buying. Yeah. Right. You think it's sexy. You've sold yourself this vision कि yes. चलना है इसको. मतलब आपने बना लिया है, problem ढूंढ लिया है. Sometimes it's a naive paradigm. Like you have to be foolish and naive enough to start. Right. And you don't, second thing is can never have 100% knowledge of the problem or the market till you create a product. You do surveys, you ask customers, do you need it? They'll say, yes, we need it. You take it in front of them. We didn't say we need this. We said we need something like this. So that always happens. So you have to adjust yourself. You have to learn to listen to what customer is not saying. Or to read between the saying. Yeah. So that's where the failures happen and disappointment happen. Then there are different kind of founders. There are founders who are very product centric, right? And the trap there is that they become so obsessed with their product, they fall in love with it. Market comes to them later, right? And then there are founders who are business hustlers, who are more market led, right? Maybe they're not as good at building products. So especially if you see now, I'm bringing the regional context. North Indians are hustlers. Yes. Delhi founders are more hustlers. You'll find really their products are world class, but they hustle and they make it work. Bangalore is more product centric. Yeah, right. 100%. Yeah. So they probably lack a little bit of hustle to take it to market. But I think these are also stereotypes. Founder to founder, it changes. Each founder is unique. Yeah. That's how. But I'm just trying to share with you what normal perception is. Makes sense. Yeah, makes sense. For me, each founder is a unique person, right? And he's solving a unique problem. And he has a unique approach he needs to have. Yeah. Right. I don't much believe in this concept of playbooks. Right. I think you only can create a unique company when you create a new playbook. Makes sense. I feel like you cannot copy someone else's playbook and replicate. I feel like they're a good guiding principle key. You can figure out an approach, but you have to, at every step of that approach, modify it to your situation, your market, your product, your Yeah, I think creating a company is a grind. It's a 10-year process, right? And in that journey, you have to create unique things about your company. Yeah. Uniqueness because of which employees will come to work for you. Unique position because of which customers will gravitate to you. Uniqueness of yourself so that investors will come to you. So it's that quest, right? Especially it happens in the companies which are creating new categories.
Yeah.
So look, what has happened with this of that. So when Flipkart started, it was copy of Amazon.
Yeah.
Right.
Yeah.
So that's a good entry wedge they got to get into India. Uber, Ola. Ola started with saying we are the Uber of India.
Yeah.
Right. So this has happened a lot. A lot of big companies got created, but there are a lot of companies which didn't have this. Right. And even in those companies where this did this of that, later on it had to change. So if you think of Swiggy and Zomato, they didn't invent food delivery. They were always looking up to Meituan.
Yeah.
Right. Chinese company uses this. But today they are in quick commerce. Meituan is not in quick commerce.
Because they've adapted to the
They
customer
adapted to
and the
Indian
customer behavior.
reality, Indian customers. And now actually, if you look at Zomato and Swiggy valuation, even though food delivery is a large part, bigger valuation is coming from quick commerce.
Yeah.
Where there's no parallel. So smart founders, smart companies create their own playbooks.
Makes sense.
Right.
Also, in your example of doing like Uber for X or Airbnb for Y, I think understanding, okay, this model works in the States, in the West, in Europe, wherever, or in China. But when you bring it to this demographic or this customer, you have to modify sort of the implementation. The general thesis works, the model works, but you have to figure out, okay, how is this going to work for an Indian customer who has very different notions, very different decision making power, uses very different factors to. I was talking to someone yesterday. Like food delivery in the US is so absurdly expensive that unless it's my last option, I don't want to do it because it just doesn't make any sense for me to spend $30 for a $10 item. And then you have to tip on top. And then if you don't tip, then they won't deliver properly. There's all these like normal nuances. So यहाँ पे एकदम very different, very different.
Food delivery in US versus food delivery in India, total different ball game.
So you have to adapt and understand the customer.
Absolutely. I think that's what smart founders do. They very quickly understand the landscape, change, adapt. I think the best entrepreneurs and founders are the ones who are closest to their customers, right? Not necessarily the smartest programmers or hackers or closest to technology. They know the tools of technology that they can use to serve the customer. Yeah. But because the founders who are not connected with the customers are always struggling.
Makes sense.
So that I have seen across many companies. Jensen Huang knows his customers better than anyone else.
100%. I worked at Indeed.com for a bit, and I felt that over time, people making decisions on what to build in the product haven't really applied for a job for the last 5 or 7 years of their life. So they're making theoretical decisions based on what the data is telling you. But when you went and talked to someone who's using it, their purview is very different from what we're building for. And I feel like when you get a gap like that, then growth slows down and innovation goes.
Whenever in doubt, go to your customer. He will give it a new direction.
Yeah.
That's my one advice. Companies face many challenges. Some companies face customer rejection, some face S-curve problems. And again, innovation has to come out.
Yeah.
But innovation doesn't come out of vacuum. Innovation comes out of people whose minds are open, who will go and research customer more, talk to the customers more. Most of the problems can be solved in any company if they listen to customer well. That is the biggest challenge in most companies when they grow up. They become, as you rightly saying, they become hierarchies within hierarchies, and the internal dynamics are overwhelming.
I think I was reading a post by one of the Rippling founders. So I think what Rippling does in the US is they hire ex-founders to own certain SaaS verticals. So instead of hiring executives and VPs, they have, I think, roughly 150 founders working for them, and each founder owns a vertical feature like its own business unit. And they're all very profitable just because they approach it like their own mini startup, but has a little more resources. I think that's a very innovative approach to sort of building companies. One thing I wanted to ask is, what should first-time founders think about? So I think there's this notion, I have an idea, let me go raise money and then go try the idea, right? Do you have an opinion on how much time or validation someone should spend before trying to raise, or should you raise and then try out the idea, or do you have a stance on that, or is it very context based?
No, I think uh, for your own good, you should do earlier validation of the problem at the smallest wastage potential of money.
Yeah.
And your life,
Yeah.
right? 100 million down, 5 years of your life wasted. You find it doesn't work. It's better that you spend 500,000, 6 months to figure out whether it's going to work or not.
Yeah.
Right. So earlier, smaller validations is what I believe.
Exactly.
Right? In any case, I don't have money to fund 100 million in a startup to chase a moonshot.
Yeah.
Right. So look, how do big things happen? One way to do big things is to create a big vision and say, I need $1 billion to do it, right? But I'll change the world. This is my vision. That's one way.
Yeah.
But even better way I have found is people who small will start very small. And many times solving their own personal problems. And then it becomes big, you see. And it keeps growing that thing. And it becomes larger than life as it grows. I believe in that version of entrepreneurship, right? I'm an angel investor.
Makes sense. Yeah.
So there is a Mukesh Ambani version of entrepreneurship or Adani version of entrepreneurship. Let's build 100 ports for India.
Yeah.
Let's build world's best 5G network. So it's good. It needs certain resources. Probably you can build, or you can say, I will build GeoFinance to be the biggest mutual fund or whatever.
Yeah.
That's one way, right? But that's not the way of entrepreneurs.
Yeah.
That's the way of mega entrepreneurs, right? That's how probably Elon Musk will do his next thing. But most of the entrepreneurs will come, they're two students or two friends who work 5 years in a company, breaking out, or maybe they're breaking out at 40 after VP level or president level.
Yeah.
They have an idea that this is the customer's problem they can solve better than how it's being solved currently.
Yeah.
And then they build on that idea and build large companies. I think that's how Zomato was built. Any company I look around myself, that's how it was built. That's how Paytm was built. That's how Policybazaar was built. That's the notion of the entrepreneurship that we like. I like.
Yeah.
The challenge that is coming now is with the generative AI. So in the generative AI realm, what is happening is for the LLM kind of startups, the starting requirement of capital itself is becoming prohibitive.
Yeah.
For most entrepreneurs. So either then you have to start with, let's say, 20, 30, 50 million kind of money.
And we're talking about because you have to train your own custom model,
I
which
just
is where the
heard
moat
a
is,
Series
right?
A of 800 billion for a nuclear fusion startup. Maybe they need it because they need to create plasma with magnets and stuff. But that is not the notion of entrepreneurship that was unleashed because we believe software will change the world.
Yeah.
Right. So these are two different ways of doing it. I still feel there's a lot in the world that can be done by two people in a garage.
100%. Yeah.
And they are my favorites. And my doors are always open to talk to them.
Makes sense.
At first go, the problem that they're solving would always look insignificant. But as you understand deeply, then it becomes big.
Makes sense.
Right. And maybe it's my own constraint of capital, but this is what I like.
No, I think also with the amount of resources available and the amount that GenAI has grown, I think it is possible to validate a lot more now than it was probably 5 or 10 years ago.
Yeah, I think even generative AI, I think the LLMs will become commoditized in my view. Going forward. Innovation still will come from small capital deployed innovatively by two guys. Finally.
Yeah.
There could be two PhDs.
Yeah.
Let's see how it plays out. It's a difficult one. So I'm just highlighting. So I'm saying there's no one route to entrepreneurship.
100%.
There are different routes to entrepreneurship. My preferred entrepreneurs are hungry, lean, mean, small teams who are frugal, struggling. I love those guys. I think if they make it big, they change the world.
Makes sense.
Right. So I am the one for them.
So you've made over 125 investments. How many decks did you go through to make those 100? Do you have any rough just rough numbers of highlighting that, hey, I'm looking at 10, 20, 30 decks before deciding, hey, this is one
So
person.
typically in a year nowadays, we do 10 to 15 investment, one a month sort of.
Yeah.
And I would typically meet 50 to 100 startups in a month. Right? But I'm looking at them seriously.
Evaluating.
My team would probably do 10x of that.
Yeah.
Right?
And this is a filtered out version based on sort of your history.
So some I meet directly, some through teams, but I do end up meeting 50 to 100 startups a month, face to face. So that's my process. And then we have a process like we have
due diligence, validation.
So typically our pace is nowadays one a month. Our team, given our team size and our capital and all that, we've optimized to that.
Right. Do you have an opinion on founders raising money from the States or anywhere from Europe or Indian founders? Or does it make a difference on where you raise the money from? And do you have an opinion on whether someone should focus on outside money, Indian money? Because I've heard stories of like, it's a little harder to get angel checks in India and build a bigger round versus I've heard the same founders who've tried to raise from the US and it's been a little easier for them to raise money from the US than to raise money from Indian angels. But do you have an opinion on that? Or
yeah, if you're an Indian company and solving an Indian problem, my view is first you should incorporate in India, raise money in India.
Yeah.
I think there's more than enough what you need. Check sizes are obviously different here versus in US because the money goes longer here.
100%. Right? Yeah, 100%.
But if you have access to investors in US, you go raise this. No hard and fast rule. If your business is going to be global, and you think significant part of your revenue or your talent base outside India, then it's all right to incorporate in US or Singapore or wherever you want. Just to incorporate in the US to access capital is fine. I think YC forced them till recently. I don't know now what their strategy is to incorporate in US. And I don't have a moralistic view on that. See, then they got some access to capital, which they wouldn't have got in India.
Yeah.
But now they need to assess whether they need to be in India or in the US. And many of them are assessing to come back and incorporate in India. I know that Razorpay is shifting back to India, a lot of other.
Yeah.
Because at this stage, it doesn't matter. And also, for regulatory reason, it's better for them to be in India.
Exactly. Yeah.
Because they want to list in India. An Indian IPO market is better for these kind of companies than US IPO markets. Yeah. So I think do understand your context. And if your business is going to be in India, your talent is going to be in India, certainly do incorporate in India, right? And you're going to be in India, then you should be incorporating in India. And if your business is global, your talent base is global, look at that outside India. That is the rough guideline.
Yeah.
Just for the sake of capital, incorporating in any country in long run doesn't work out to be the right idea.
When you're evaluating startups and looking at companies, there are some industries you're familiar with. There are some industries you know more about than others. How do you go about vetting and understanding a founder who's building something, let's say hydrogen tech? I don't know how much you know about it. I'm just hypothesizing here. But how do you go about vetting and understanding that space? Because there's a risk of you missing out on a good investment just because you don't understand it. Or do you just stay away from stuff you're not familiar with? How do you handle that process?
Yeah. So look, that is what is so exciting about my job. Every year I have to learn new things.
Yeah.
Right. So, like, what did we know about generative AI till 3 years back? Which VC knew so much, right?
Yeah.
We've been hearing AI for such a long time. So you learn, right? You have to learn. There's no other way. You have to figure out. If deep tech, space tech is becoming big, then you have to understand what that thing is.
Yeah.
Then EV technologies are coming. Then you have to understand EV ecosystem. So the exciting thing about our business is that we are dealing with industries of future.
Yeah.
We are not dealing with industries of now, right? And everything will be built in the future. It's our imagination.
Yeah.
Right? So if you think of this whole ICE to EV transmission, for example. I'm just highlighting. We have to learn. There's no other way, right? We have to understand nuances. And I have put few investments in EV space. You have to understand which industries will be impacted first, which will be impacted later. What are the limitations of technologies? What is the limitation of human adoption? I'll give you an example. 3 years back, in our condominium, so there was an enthu guy who felt that so EV chargers are put when you buy an EV car. Right. So I had bought an EV car. So they allowed us to put a charger near our parking space. So 2-3 guys were there. Out of the 200 cars, 2 guys became maybe early EV adopters, like me. So we asked for that charger and they put that charger. And then there was a society, RWA, Enthu guy. He was imagining that in 3 years, 50% of the cars will be EV. And he wanted to put charging points everywhere and charge and not have at the parking lot. And he went ahead and did it also. And those now 3 years out, we still have only 6 or 7 EVs out of the 200. Right. See, he overly estimated the change.
The adoption.
But next 3 years, we may have 20. But in 10 years, we may have 150. Right. But if you look at the other industry, logistics, last mile logistics, look at the fastness with which the motorcycles are being changed by EV vehicles. So I invested in Zip Electric, for example, and they're benefiting from that. The last mile of India is all becoming electric. Is the early adopter of EV technology, right? Zomato riders, Swiggy riders, and Zepto riders. And now you're also seeing the small trucks. They're all becoming EV who do 20, 30, 40 kilometers from distributor to the shop. But trucks are not EV as yet. Right? Buses and trucks are largely ICE. But there also small changes are happening. So you have to understand the context. And then some of these industries are also very regulatory driven. In China, EV adoption happened so fast because Chinese government gave huge incentives for EV adoption.
They pushed the masses there, right? They gave people a reason
to shift. Well, India has done moderate amount, right? Little bit, and now also they've withdrawn. Some PLI scheme, something they've done, but not in the way Chinese government pushed EV. Right. So regulatory push becomes a good moat, right? In Indian kind of economy, you have to really understand where the regulations are going, right? And understand the regulatory direction. For example, this morning, there was some announcement, SEBI may change F&O rules, right? Immediately, the stocks which are Angel One and others, you'll see will shrink, right? So fintech is hugely regulatory influence. So you have to be on top of not just tech change,
but also
within the tech regulatory changes landscape that is happening, right? So you cannot be naive about it. You have to understand the background.
100%.
But that's the exciting thing of the business. That's why I chose to become an investor. Because I deal with new things. And I always imagining, as I told you, industries of future. I'm not dealing with industry of today. Right. I am thinking how this studio would look 10 years from now. Right. Would we be doing podcasts like this? Right? What could these tools be looking like?
Right?
Would you even be having a studio? Right? So that's the excitement, but that's why we have high failure rates. Right? Because future takes its own shape and you can wrongly imagine the future or slightly wrongly imagine the future. There are a million paths to the future.
Also, 1 degree off right now is, I don't know. And so, like, if you make a slightly wrong bet or a wrong interpretation or something, it's not that it was a bad idea, it just didn't pan out.
That's why you need adaptive founders. The founders who will always steer in the right direction. So it's not one-off exercise. It is iterative.
Thanks, sir.
Right? So I'm just trying to deal with this concept of rapid change. Also, what's happened in the world is that the changes are not only accelerating, but the cycles are becoming smaller, right? So nothing is now lasting forever, right? Industries disappear faster, right? So therefore, you have to deal with this construct, right? Your payback period is 20 years, 10 years, 50 years, 100 years. So, but I don't think there has ever been more exciting time in human history than today as far as tech is concerned.
100%, yeah.
Right?
Because there's so much rapid change that day by day, innovation is exponentially growing, right? So the industry is.
So 10 years back, we saw those movies, Terminator and all those doomsday movies, AI is coming, there's robot, there's that. And it looked futuristic. Today, those movies you see and you start feeling, yes, it's possible.
Very realistic.
Right? And if you go to San Francisco, Waymos are going now. Right? You maybe even Austin. And the whole robo taxi thing is coming. So the future is almost here. Right? So isn't it so exciting to deal with
100%,
all of this change that is around us? It's challenging, right? So it's both challenging and exciting, right? There are issues, but I would rather be part of this than on a world where nothing changes, right?
Have you sat in a Waymo or a driverless car?
Yeah. Technically, even Tesla is driverless car. You can, but because of regulatory reason, you not. Look, it will become a normal human experience,
100%.
Right? Some people in SF will never ride Waymo. They are so intimidated, right? But it's like some people would never use ATM in the beginning, right? But now ATM is a normal behavior. And now ATMs are also going away.
The biggest stark difference I saw when I sat in a Waymo was in SF only. There was every kind of person. There were tourists who have no idea what's happening. They're looking in this car and they're just shocked. You have people questioning, okay, how is this working? Then you have people who are comfortable with who don't even care. They're like, this is just everyday life. Doesn't matter this is going to change or not tomorrow. They know it's there. They don't really care. But there was a stark difference of 4 or 5 different groups of people. Just varied levels of understanding. There's some people so involved and there's some people so disconnected. You have no idea what's even going on.
Yeah, so look, 10 years back, if people were pitching to me, we will do robotic dogs for homes. Even in India, I would say it's not nonsense. Today, if someone pitches to me as what an exciting idea. So I think so much change has happened in our life in last 10 years, 10, 15 years, that we become futuristic in our expectations and aspirations. Right? So I remember the company pitched to me Roti Maker, right, with a Singaporean company. Today it seems like, we need it.
I feel like every tech household I go to, I see a Roti Maker.
Especially in the US, right? So, look, but this is the vision of those founders who imagined it, started building. It's taken them 10 years. Still not there where they wanted to be. But what I'm trying to say is that there is so much of tech now all around us that it's changing fast, right? So that's an exciting part.
100%, yeah. I know a couple of angels in the US who invest solely for the reason to be associated with young and thriving founders. They're not looking at it as, hey, I want to make money back. For them, this is sort of a tuition fee to just surround themselves with founders who are innovating just so they can absorb and learn as much as possible.
No, absolutely right. This is how I also started. So I said I'll give myself 50 lakhs. I took 50 lakhs. I'll invest in 5 startups. And I was sick and tired of my corporate life. And I said, I'll break out now. And I said, I'll learn. Right? I learned.
First 5-10 bets are mostly always zero.
Even today it's learning. But today the lens has changed. It's not just learning, but also seeing whether it can work or not. That point of time, it was like that first 50 lakhs I kept only for tuition fee. To unlearn my corporate nonsense and learn about innovation. Right? But you're absolutely right. So I think that's how you should. This is what I tell new angels. Put first 50 lakhs for your tuition fee. Right? You will learn. And then build from there a base of next 50, next 50, next 50. And then it'll work for you. Yeah. If you are consistent and you continue to back founders, you'll find the good ones. 100%. Yeah. Right. There's no rocket science. It's simple principle of angel investing is be in the company of good founders and keep backing them.
One thing I wanted to get your opinion on is there a right or wrong way of founders to approach building? Should they build with an acquisition in mind? Should they build with a sale or some outcome in mind? Or should it just be, hey, let me try to solve this problem? Because I've met both kinds of founders, and I feel like when I talk to second, third, fourth time founders, a lot of them have this idea of, okay, I'm gonna do this for 2 to 3 years to 4 years, and try to get an acquisition or sale offer in year 5 based on whatever trajectory.
Actually, I don't fund those founders. I want to fund the founders who want to run it forever. Got it. As if they found the mission of their life.
Exactly.
Right? If you're going to put 5 years or 10 years of your life behind a finite outcome or infinite outcome. I would put my money behind. For me, the return is better if I put my money behind people, and 90% of them would fail.
Yeah.
So what is the holy grail of investing? Holy grail of investing is finding 1000x, 2000x, 10,000x returns. They will only come from moonshots, or they'll only come from people who create category defining business.
Yeah.
Or a new way of doing things. If you found a new way of doing things, why do you want to sell it? If you want to keep it with you.
Yeah.
Right. So the idea is I'll build a product and I'll sell into Cisco. I'll do this, I'll do this. These are finite outcomes for my money.
Yeah.
Right. 5x, 10x, 20x. I am not the right guy. There will be other investors. I'm not the person. So I never ask any investor what's your exit plan. If they have a slide on this is how we'll give you exit, I get worried.
Exactly.
Right? I want to know what is your business? How are you going to build it into a big company?
Exactly.
How are you thinking about it? Are you wedded to this problem, or are you only mercenary trying to see whether it works or doesn't work and move on to the next problem?
Yeah.
So for me, I want to bet all my money on missionary founders.
Exactly.
Right. So for me, that paid off better.
Yes. YC has this request for startup list. I think a lot of accelerators, VCs in the US have this list of topics they're excited about, things they want to do, or things startups should reach out about. Do you have a similar sort of pseudo list or thesis of like, hey, here are the spaces exciting you right now. Here's where you would like to see some people think or build an idea.
No, that's not a bad idea. I think things keep changing, right? And a lot of new industries are becoming feasible because of the fast pace of change of technology.
100%.
So it's all right if some accelerators only want to focus on generative AI.
Yeah.
Or some only want to focus on deep tech. Some only want to focus on health tech. It's fine. I think there's enough for all of us to do.
Yes.
Right. We are more broader, but still tech focused.
Exactly.
So we open our arms to everyone. And of course, we also want to see startups who are on the cutting edge of technology or cutting edge of change. And therefore, we sometimes do put out that will be especially looking for these kind of startups. And that's because in my last 12 years or 15 years of experience, I've seen every year flavor is different. Things are evolving. But look at it in the way the technology evolved, like when GPS chip came on mobile phone, then all these location-based services became big, Ola, Uber, all of that, right? Now Apple is saying our smartphones are intelligent. So all the AIs are becoming smart. So the apps are becoming different AI kind of thing. So 10 years back, there was no space tech in India.
Yeah.
Today, there are 50 startups on space tech, with other 50 startups on biotech. So these are new areas that are emerging because government changed its stance. It opens its arms to innovation, right? And then said, we want to embrace startups in certain technologies, drone, space, and so on. So obviously, and they are also contextualized, right? The one is like, if you look at space tech, the biggest motivation in the world is SpaceX.
Yeah.
But then India is large enough country with its own space program, right? That it can have 20, 30 good startups supporting the ISRO mission.
Yeah.
Or even becoming bigger than ISRO in 5, 10 years. So privatization is good. And it seems like government is open to this idea. And therefore, good opportunities are becoming available for investors and founders.
Makes sense.
Right. So there are certain global trends, what I'm trying to say, and there are certain things that are happening because of certain changes in large economy. Like if you take Chinese economy, they sometimes shut down certain sectors, sometimes they open certain sectors, and you'll see certain startups coming there.
Makes sense.
So space tech currently is a good space to be in. 2, 3 startups have already broken out. Broken out in the sense they raised enough money to launch their
And go to the next phase.
next phase.
Yeah. Nice. Sweet. We're almost at time. I end my shows with this one bit where I'll ask you a question from my last guest, and I'll ask you to give me a question for my next guest. So your question is, what do you think is missing from the Indian startup ecosystem?
Balls. We need we now have enough talent density and execution. We need moonshots.
Makes sense. Bigger bets,
bigger, bolder vision of the future.
Yeah.
And I think that is the next frontier. I can sense it is in the making.
Yeah. I also feel like people are taking riskier bets, but I feel like there's a certain entrepreneur type who's willing to give it all on this idea or lose it all, right? Like, I think that's a very particular archetype that you need to be able to take that bigger risk and just be like, hey, it's all or nothing. And let me just figure this out or fail and move on to the next.
All or nothing is a different idea. I think, like if you were to build a nuclear fusion reactor startup here, it will need $100 million funding, right? But we need that technology to change the landscape of energy generation.
Makes sense. Yeah.
Right. And this is the bets they're taking in the Bay Area.
Yeah.
$800, $900 million Series A happening also. I was shocked for nuclear fission project.
Okay.
So something like that, a few more bets like that.
Nice. Okay. What's your question for my next guest?
I don't know who your next
Doesn't
guest
matter.
is.
That's the whole idea. It's just
In the funding investing space.
Yeah.
What would you change in government policy, Indian government policy, to spur more investments?
Got it.
Right. So for example, we'll take a minute.
Yeah.
For 5-10 years, we wasted our energies on the false issue of angel tax. 10,000 startups or 20,000 startups struggled from notices and energy was wasted. And still court cases are going on. Only now in future, they will not do angel tax. I think government should withdraw this angel tax from retrospective.
Yeah.
So these are some negative energy causing provisions.
100%. Yeah.
What should government do? 2-3 things which can unleash the energy of the startups.
Makes sense. And focus on solving the problem, building the product, and not on administrative
I'm glad
policy
that they
regulation.
reduced now finish the angel tax. I'm not happy that they didn't do it retrospectively.
Yeah.
Which they also should do. But there are a few things government can do. I do believe governments have a lot of role in country like India to help startups.
And there's upside for them as well, right? It's not just policy. It's a greater good for the whole country ecosystem. Economy.
There are no jobs. The biggest job creators are startups.
Yeah.
Regular industries are hardly creating jobs.
Yeah. Sweet. So where can people reach out? What do we plug for you? What's the best way to?
Right. Our website is gsfindia.com. There are multiple touch points there. If you are a startup, you can submit your proposal. If you want to join our academy program, you can submit your details. If you are an angel investor, you want to learn, there's a super angel program.
And we link everything in.
There's everything on the
infographic
startup on our website. It's a new website that we launched.
Nice.
And there are 4 or 5 touch points there, which we've configured for you to get in touch with you. And we always get in touch.
And we'll put this at the beginning of the episode as well, because retention is only 5-6 minutes on YouTube. So we'll put it before, then we'll plug it in there.
Well, that's fine.
Cool. But no, thank you. Thank you for the time. Thank you for coming on. I hope you enjoyed the
lovely conversation. Thank you, guys.